Top of the morning, friends and fellow traders. This is Doug Campbell with Right Way Options, and this is the morning market preparation video for February 27th, 2018. My, did those bulls get going yesterday. I had mentioned yesterday to be cautious not to chase into the market and to watch for bullish follow-through, watch for those buyers to really step up and come in, and they sure did just that. You know, we had that morning pop, and we did get that little pullback rest that we have to always watch for, and then those bulls started to come in and really got cranking to the upside. Very, very strong moves yesterday overall in the market. The Dow at one point up over 400 points on the day. It did tail off a little bit toward the end of the day. A little bit of profit taking going on. Looking at this morning's futures, the futures are slightly down. We're expecting about a 50-point gap down, which is remarkable when you consider the fact that we gained about 400 points yesterday. So truly remarkable that they're holding that strong. Now, we have a lot of things today. We'll look at the indexes here real quick, but there's a lot of things that could really move this market around. We'll talk about those in just a moment. Let's take a look at the SPY. SPY also beautiful follow through yesterday. Nice and strong. And remember, this is the same pattern that I talk about all the time. The place to buy. Don't chase into here. Let the pullback occur. Wait for your entry over here into the trades. And we got that pullback to support. We had that nice hold. Although it was rather volatile, really volatile, and made it very, very challenging to trade, that's the kind of pattern that we're looking for. It's the similar to here, just like what we see right here. The rally up, the pullback, the buy signals, the entries. The rally up, the little pullback, the buy signal, and entries. Over and over and over, if we follow that pattern, we'll be much more successful as traders. We want to buy at or near price support. And what made this one extra challenging is just the high volatility and the big moves that the market is making right now. So if you're not in this, don't worry, because a little bit of a rest or a little bit of pullback is usually typical after a breakthrough of a major moving average like that. A breakthrough, we might get a little consolidation or a little pullback that could occur here. Now, so in saying that, we don't have to ever rush into the market. We should never have to feel like we are rushing or hurrying our trades. If we wait for the proper setup, we're going to have a better response or a better result in our trading. If we look at the volatility stop you can see is still very spread out here. And it's just simply because we have so much volatility in the market, making it extra challenging. And particularly for those that are new or relatively inexperienced, this is a really tough market. Even though it's been beautifully bullish here just recently, it's still a very challenging market. Let's take a look at the Qs. Qs very, very strong, reaching up here, trying to test those all-time highs. Haven't quite made it. You know, that all-time high is right up here. I would suspect we're going to challenge that all-time high here soon. We may get a little rest or pullback prior to that, though. So just realize that right there is the target for the Qs. A breakthrough there, wow, that would be really impressive, to be honest. A true V bottom pattern. You don't see those very often. Let's take a look at IWM. IWM powering on through, getting a follow-through day yesterday, breaking through that 50-day moving average. Much, much better to see all four averages working together and moving the market up. Now the question is, can they hold? So with that in mind, let's take a look at the economic calendar today. We've got a lot on the calendar today. First, we have durable goods orders at 8:30. We have international trade also at 8:30. Durable goods, these could be a little bit questionable today. There's conversation consensus-wise that durable goods is going to see a decline overall in the number. We'll have to wait and see. And then there's other consensus makers out there saying it could be flat to slightly positive. So kind of watch that. International trade is showing a deficit and typically always shows a deficit. But that's expected to slightly narrow today. But the big thing that probably is going to make the biggest splash in the market is Jerome Powell, our new Fed speaker. He speaks at 8:30 and then he's testifying to Congress at 10 a.m. today. Notice here we have the core logic and we have consumer confidence at 10. So kind of keep an eye on that. Now, Jerome Powell speaking in Congress, the market, we can expect, I think, the market to be incredibly sensitive to everything he says. The market will likely hang off of every word he says. Now, if he talks immediately wanting to kind of hit the ground with a hawkish attitude, we're probably going to have to raise interest rates. We're probably going to, add more interest rate increases over the next couple of years. That could seriously affect the market. The market's already very nervous and very sensitive to interest rates. So if he does that, it could be a problem. If he happens, however, to come out and sound a little bit of a hands-off approach for right now, I'm just going to relax and kind of work my way into this job a little bit slowly, have just a tiny little bit of a dovish sound to how he's going to approach his new position, the market could just rip higher. So you couple that with our big economic calendar today and over 240 companies reporting earnings today, and we have the mix for a high volatility day. We could see lots of throwing back and forth. If the earnings come in good, that's awesome. We can continue to push good numbers there, but we could get lots and lots of whip as the new Fed chair speaks. So be cautious and be careful of that. Just make sure you have a plan to protect your capital. And that means having a plan to take profits, having a plan to exit a trade if all of a sudden the market appears to be reversing. Keep in mind, when we have high volatility, we tend to do what's called a whipsaw, and that is we can quickly either go one direction, whip up, whip down, and whip right back. So whipsaws are very typical in high volatility markets and as markets approach all-time highs. So the majority of the market is not approaching that all-time high like the Qs is, but as we approach up there, we can expect a little bit more whippy price action. So that means overall today that we could have kind of a bumpy ride, and we need to be prepared for that in our trading. Don't be surprised to see really fast price action as we kind of hang off of every word that the new Fed chairman utters. So watch that closely. It is possible that he comes out and he's just very prepared, and the statement is just kind of a non-event. What he does in Congress is kind of a non-event. That is possible, and we just kind of rest a little bit in a sideways pattern. So, we have to be prepared for pretty much anything. Let's take a look at the VIX. The VIX had a nice decline yesterday. Let's take a look and notice that we're coming right into that level of support, right toward that 50-day moving average, where we could possibly see a bounce. Let's hope that's not the case, but that's where we could possibly see that bounce in that VIX. So watch that closely. Today, it could be an important level for the overall market. Remember, this big downtrend that we breached and came all the way up here. That could also serve as a level of support. So as we come back down here and we start looking at these areas of possible support, first we have price right here. Price will be an important level of support. We move on to, move on down, and there's more price that could serve as support. We move on down and we have support in trend that could serve as support. So kind of watch those closely. Right now the market is just extremely bullish as of yesterday. Just really kind of got moving hard. Let's look at T21 22, and the T21 22 4-week new high new low ratio, and you can see we're approaching up here toward that bearish reversal zone. We're moving up there. We're not all the way up there, so we still have plenty of room. And notice we can get up here and we can wander. We can get up here and we can stay up here for a while. So not suggesting that we come up and just immediately pull back, but we could come up into here, bounce around up in here, and stay up here for a little while. But if this gets really, really going here, just remember, if the market starts ripping higher today, just remember we're approaching that bearish area up here where it might be a good idea to start taking some profits. All righty. Everyone, I want to wish you all a fantastic day. I want to wish you great profits. And if this is the first time you've seen this information, please do me a favor. Click on that subscribe button on YouTube, the follow me button on Facebook, and click those thumbs up buttons. And please feel free to share this video with any friends and family that might find it helpful. Everyone, I want to say thank you for watching these videos. Thank you for your support. Thank you for clicking those thumbs up buttons. I really do appreciate it. And dropping those comments. You guys are awesome. I really appreciate it. Everyone have a fantastic day. And I will talk to you all very, very soon, bright and early Wednesday morning. Take care now.